Here is the overview of today's gold market news. Gold price performance, price trends, and technical outlook. Gold gains ground amid steady Federal Reserve rates and rising inflation. Gold's rise backed by central banks and global shifts. Middle East conflict reinforces gold's role as a safe haven asset. Let's have a look at the latest gold price performance, price trends, and technical outlook. Early this week, spot gold opened around $3,317.32 and mostly stayed between $3,320 and $3,345. A brief dip to the floor price of $3,296 last Sunday night tested support, but held. The metal stayed range-bound, within a tight $50 range, until geopolitical tensions escalated midweek. On Wednesday, as reports of escalating Middle East conflict surfaced and release of inflation data, gold surged from $3,324 to $3,377 by late evening. By Thursday morning, gold touched $3,399. Following Israel's attack on Iran, prices peaked above $3,440 per ounce late Thursday. Prices later pulled back to $3,414, then stabilized between $3,420 and $3,435. Currently, the price is nearing its recent record of $3,400 per ounce. Conditions this week and possibly for the rest of June support a continued rise, potentially breaking the current record. The combination of persistent inflation, geopolitical uncertainty, and Federal Reserve rate policy makes a price decline unlikely in the short term. Analysts are overwhelmingly bullish in the short term, with central bank buying and a shifting economic outlook in the U.S. adding further support. A move to $3,500 or even $3,600 is increasingly seen as possible, though a resolution in geopolitical tensions could trigger a pullback. Market watchers are eyeing the April high around $3,509. A survey of Wall Street traders revealed that 71% expect prices to rise and only 7% predict a decline. Retail investors were more cautious as only 58% were bullish, while 21% were bearish or expecting sideways movement. Analysts have issued a buy recommendation with a near-term target of $3,500 by June 20th. The gold price may reach $3,600 by September if instability continues. The downside seen as limited and gold unlikely to fall below $3,200, possibly not even $3,000. Investors are advised to stay rational and avoid buying or selling based on fear. Experts recommend limiting gold to no more than 10% of a portfolio to allow other asset classes like stocks and bonds to play their roles. Investors are looking at silver, platinum, and palladium as alternatives if gold tops out. Analysts suggest silver may reach $50 per ounce. Moving on, here is how gold gains ground amid steady Federal Reserve rates and rising inflation. The recent U.S. monetary policies and outlooks, such as the Federal Reserve policy, the Treasury yields, and inflation reports have supported gold prices. The Federal Reserve is expected to hold rates steady in the June meeting. Since gold prices usually drop with rate cuts but stay stable or rise with rate pauses, this supports the case for gold maintaining or increasing in value. Reports of lower Treasury yields, a weaker U.S. dollar, an increase in May's inflation rate from 2.3% in April to 2.4% had supported gold as a safe haven asset. Next, here is the update on gold's rise backed by central banks and global shifts. Swiss National Bank and the Bank of England is anticipated to deliver their monetary decision next week, with the Swiss National Bank anticipated to cut its rate to zero, adding to global dovish sentiment. Central banks, particularly in Asia, are increasing gold holdings to diversify assets away from the dollar in the face of dollar weaponization. This supported long-term demand for the precious metal. From 2022 to 2024, the annual purchases have exceeded 1,000 tons, and central bank holdings of gold now makes up 20% of global reserves, surpassing the euro, which stands at 16%. Only the US dollar holdings are ahead at 46%. Analysts note that long-term drivers remain intact, such as the continued US dollar diversification by central banks, Chinese non-official gold purchases in the midst of a possible yuan devaluation and slowing economy and growing concerns over U.S. debt. These structural trends are likely to keep supporting gold beyond short-term political shocks. Moving on, let's look at how the Middle East conflict reinforces gold's role as a safe haven asset. Gold surged this week largely due to geopolitical tensions, especially renewed conflict in the Middle East between Israel and Iran. While U.S. inflation data was positive, it had little effect compared to the global unrest, and geopolitical events remain the strongest near-term driver of safe haven demand for gold. The worsening global conflicts and domestic unrest serve as bullish catalysts. While geopolitical surges are common, they are often short-lived without broader escalation. A true breakout would require further escalation in the Middle East or elevated global tensions to drive more demand for gold. A worsening in overseas conditions or failed trade talks could spur more gold buying, pushing prices even higher.